Good morning, it's Harvey Jackson. Just going to go through a couple articles I've seen online. So let's just have at it here. Let's get in here. So Mitch Miller posted some articles on barley, which I don't have a whole lot of growers growing barley, but it's pretty interesting. And just some of the ways he's looking at it. So the Canadian barley production by StatsCan and Agri-Food Canada data is highlighted here, and you can see that you're nor growing a huge amount of crop or lower, but this is what's expected. And the total ending stocks when you get into 2025 here, marketing year, looks like it's going to be fairly low or almost similar to 23. But when you actually look at your pace analysis, total ending stocks looks like it's going to be quite low, or probably the lowest it's ever been if the pace stays the same. So what he also talked about here is just the exports from August to December 31st. And you can see we're not as high as we've ever been, but we're still quite high. And then when you compare it to the corn imports, and I think you noted on X that Feedlot was looking for this kind of information, and it's surprising the differences in corn versus the barley imports as well. So here's just a quick note. I thought I would throw this in the middle here. What I want to point out is this year, we're starting to have a pretty good slowing pace last week. When it came to the crush capacity utilization, and it's down quite a bit. So here's the article, just so you can maybe refer it to another article from Mitch Miller, and he's talking about the European Union's buying, and in this graph he excluded China just to show who's all buying, and there's a fair bit of buying from France, Germany. Highlighted in the greens is all your European countries, and then your other Japan, Mexico, and United Emirates are all pretty strong buyers there as well, along with China, just in the month of December. Here you can see what we've been talking about for quite some time. This is the area that we want to pay attention to, and there's a lot more exports of Chinese goods than what's listed in that 1 month. So here we are, just looking at the soybean and the soybean exports Karen Braun was talking about here. You can see that there's an increase in Brazil and exports to China, and decreasing from Europe in this slide. That would be the main feature that I would talk about. And then it's just interesting to see where their destinations are just as of 2024. So 48% of all the soybeans are made up of the Chinese trade from Brazil, and only 18% from China, or from U.S. Canadian inflation slowing, even though we've had cut rates. So I'm not sure if this data keeps flowing in like this, there might be another cut at rates, interest rates again, even though the U.S. is on a holding pattern. Just a FYI on there. Palm closes 3% higher. You'll see that in the charts here in a bit. So if we're just looking at the numbers here, you get $3 to $4 on canola. Rapeseed is about the same. Soybean oil, it was up pretty strong yesterday and only up 40 some points today. Palm oil is up 171 ringgit. Crude oil is up as well. Everything's green on the screen. Wheats are basically flat, and the Canadian dollar is down a little bit as well. So let's just have a look at what this means in the chart. So long-term trend is the blue line here, and we're surpassing it and above that trend and at the top end of the channel, which is good. And we look at slow stochastics, it means that we're staying in an oversold kind of a position. Well, when you look at the new crop, we're right at that trend line as well. So just keep that note, but you got a pretty good steepness of the curve here, and just look at the slow stochastics. It's not wavering and staying oversold for a fair bit. Rapeseed, nice uptrend. If you're going to put a channel, I don't know how you would do this one, but it would be still an uptrend. Need to make a higher high to remain bullish in that crop, of course. If we look at the differential, here we are. Since last year, we've been in an uptrend. The Canadian dollar, or the European canola price in Canadian dollars minus the price of canola, it's $117 higher. And you can see that we did break out on the veg oil finally. Had to break out of that channel somewhere. So it looks like we finally broke out to the upside. Now looking for 49.44 is the current, just a recent high made in November. Here's your differentials of your different commodities. You got soybean oil. So this is soy. This is canola, and here's your rapeseed, and then your palm. So you're looking at soybean oil since January 1st has rallied the most. Canola right behind it. So, but 10% lag since January 1st. Palm oil. Here's this long candle. It's starting to get a little bit more volatile, following the other veg oils. Soybeans still got a nice little recovery in the last few days here, but still not making higher highs on that one yet, and that's off the May. Here's your Canadian dollar popped above. Now it looks like we're going back to that past trend line. Wheat above the 61.8 and approaching the 78.6. And if we look at it on the new crop December, we're getting close to my upside target of $7 there. Now, if we look at this is a chart with a trend line on it. So this is a long-term trend line on it, and we're just going to zoom out and have a look at it. So this is where I drew in the long-term trend line, and that is a good sign for a breakout. If it does break out, would love to see it get better than that, but that's 750. It seems like a long ways away from that right now. Here's your hard red wheat in the front month or May, and it's nearing the 100% retracement value, or back to the old highs made in September. So there's a very deep dish here. And if we look at the December 25, it's already broke out. And if we look at the trend line, it did exactly the same thing. It's breaking out of that downward trend. Corn on the May broke out above the last high made back in May. So I moved to the next month. So that's a strong signal. Let's keep that going. And it measures for new crop is not quite as high, but looking for at least that kind of value. $5 would be probably the next sales target there if we can get there. Here's live cattle. This is not the trend that we want to be in, but I do notice that we oversold, so we have to be cautious of any short positions that we might have added in last week or the week before with this downward slide. We would be watching for this to cross back over, and that's the signal to get out of your shorts on that one. And that's all I have for you today.